The uncertainty here and abroad already being addressed in earnings. JP Morgan CEO Jamie Dimon warning this may be the most dangerous time the world has seen in decades. That said, his company beat estimates. Joining us now to talk about earnings, risks to the market, rates, and more, Ron Insana is chief market strategist with Dynasty Financial Partners and a CNBC contributor. And Victoria Green, she's CIO at G Squared Private Wealth, also a contributor and here in the flesh, I should add. Welcome to you.
Absolutely. Thanks, Gil.
What a day or a week also, Victoria. What's top of your mind? I mean, when you look at the market broadly speaking, do you see it kind of trying to break out to the highs or worry that it's trying to maybe go back and test some lows?
I think it's just trying to tread water right now. It's got some good catalysts. Earnings were generally pretty positive. I love how Jamie Dimon, it's almost clockwork. Every time his company reports earnings, he says something dire about how everything is terrible, and yet his company continues to outperform. So I always think that's an interesting dichotomy from Jamie. But yes, there's a lot of risks right now. The uptrend does remain intact for the markets. 4,200's held, uptrend is held. So for now, there is potential that we could see this rally out if earnings do continue to come in stronger. But there are, I've said, hey, we've been climbing this wall of worry, but this wall keeps getting higher and harder to climb. And I think stocks are facing a lot of headwinds. They may get a leg up, though, with the Fed looking today. And what Harker said today, I think, was impressive, because he said, look, by doing nothing, we are doing something. And to me, and he's a voting member, I know Bullard came out saying 6.5, but Bullard's been saying 6.5 for a while. And so, look, I mean, you might get that kind of the Fed put a little bit if they come to a pause. But for now, yes, the fundamentals, earnings, there's some upside potentially.
Ron, I forget where I read it, but maybe it was Peter Bookvar making the point that we've seen the 10-year up 75 basis points, I mean, the equivalent, let's call it, of 3 more hikes than the Fed has actually had to do. And the 30-year action yesterday, pretty ugly. So these rising rates are having an effect.
Oh, absolutely, Kelly. And I think they're peaking out, and I think the Fed's done. I mean, to prior points. And listen, I'd stop listening to Jim Bullard. He's not on the Federal Reserve anymore. He's now at a university. He was generally wrong for much of the time that he was at the St. Louis Fed, so I'd kind of discount him. With respect to what Jamie Dimon said, I would tend to agree with him and Paul Tudor Jones that this is a risky period. Although, in 1962, much more risky. We had the Cuban Missile Crisis. We had a near accidental nuclear launch in the early 1980s by the Russians. And certainly in 1973, we had the Arab oil embargo. This may turn into something wider that invites in superpowers and could become a regional conflict that has, dramatic consequences. But I think that remains to be seen. This is tragic. It is horrendous. It's hard to say, however, what the long-term impact on the economy and markets would be unless this were to spiral out of control. So, on the one hand, I think rates are peaking. I think that, the stock market's going to chop around until it has a good reason to rally fully. But not much has changed in my point of view, other than the fact that I think the Fed is absolutely done at this juncture.
Yeah.